Yep, got her back on. All right. So anyway, the officer did an amazing job, received a 99 out of 100 from each of the three very experienced faculty, two of whom had never met him before, so they had an objective basis of measuring him. And he thought he was a weak B minus, which is the lowest score that you can get and still pass. And so I said, look, if your judgment is that far out of tolerance with the professional judgment of these three senior officers, then there's a real problem that we have to work on over the next 6 months before you graduate, so that you can align your judgment more with the professional standards, so that you can be trusted when making judgments involving people and their careers. So an officer that was as skilled as he is on technical material, I can trust him to do good independent staff work. But if his judgment about what constitutes good performance is that far out of tolerance, then I have serious concerns about whether or not we can recommend him for command and leadership positions, because he's too far out of the norm for judgment. And so we had a good long talk about wabi sabi, which is the let me spell that, wabi sabi, Japanese term for the beauty of imperfection. It's an acknowledgement of the essential uncontrollableness of life, the unknowableness to a perfect degree of life, and that everything human has some elements of flaw in it, and that to hold out for perfection is to misunderstand the nature of the human experience. And since the profession that I'm in with him in the military is at its very essence a human one, under the most extreme of circumstances, it's really important that I work with this guy on professional norms of judgment so that he can be entrusted with positions of responsibility. And what it reminded me of was the importance of team building and team validation and team verification, and why you want to be in a mastermind group, a collaborative learning group with diverse people, so that you can ensure that your judgment, which gets affected by things like circumstances, context, emotions, events, and your own unique perspective, that it's important your peer group, your validation group, is based on truth and honesty and feedback, genuinely given and properly received, in the spirit of getting better and taking care of our soldiers. And I think trading is exactly the same way. And we saw a lot of evidence that this weekend when we were working in collaborative learning groups, and a couple different collaborative learning groups reported on their group findings from the work that they've been doing in the COVID era. And because trading is so stressful and is dealing with markets that are right on the edge of uncertainty at all times, and that to be a good trader is to seek to enter those moments of chaos at their peak in order to take advantage of the volatility that gives us tradable moments, it's even more important for traders to have that kind of validation network that is trustworthy and reliable and built on honesty, integrity, values, data, and evidence, so that we have a way to contend with or to manage the inner monkeys that are driven by fear and greed and stress and enthusiasm, so that we can stay grounded with our human partners. So that was on my mind today as I watched this kid struggling through the test and feeling that he hadn't done very well, and yet we were praising him with great praise, and he heard that, but I could tell that he didn't believe it, and he hadn't internalized that it was just words going through his ears. And that was the most important piece of feedback to give him, not about the technical pieces of that he was being tested on, whether it was doctrine or tactics or things like that, but it was more on the sense making and the judgment and the self-image and some of his deep background. And so I'm looking forward to having long conversations with him as we go forward. I think there's some insights that I can bring to the table for him to help him come to grips with those inner demons that cause him to believe that he's never good enough, no matter how good he is, no matter how hard he works. He's never, it's not that he's not satisfied. He's not even satisfied, but he's really almost in despair about not being able to master the things to the level that he imagines he should be able to get to. So it's that pursuit of a notional perfection that's really torturing him. And so, boy, have I ever been there. And so I invited him to start reading and viewing Wabi Sabi, and to get a Wabi Sabi piece of art and just contemplate it for a couple months before he comes and talks to me. And I want him to fully study and embrace and experience that and see what he comes up with. It. I'll check in with him before 2 months, so probably like right after Christmas. So I was thinking of all you guys and the experience we had this last weekend with the validation of trading ideas. Like, I can't tell you how many times people come to the research weekend with a piece of research from their perspective, and maybe the system didn't do what they wanted it to do or thought it would do, and all they could see is that that didn't work, or that piece of it failed. And yet those of us that weren't inside the fishbowl, those that were looking from the outside with fresh eyes, could immediately see value that the researcher couldn't see. Like, Jeff was working hard right up to the last minute to do some analysis about MACD 4 seasons and how that might affect supported spring crossing trades. And it didn't do what he thought it would do. Like, the win rate on it was really low when you we're looking at the daily condition of daily summer. And he thought, man, that should be the best. And yet it wasn't. It was 2/3 of the time it was failing. And he considered that it was interestingly, it was a positive expectancy system, but it had a only a 33 or 34% win rate. Still positive expectancy, but it wasn't what he was looking for. He wanted a better win than loss average, and he wanted to win more often than he lost. So he wanted both things, because why not? And so he thought that research idea was a failure. But then we pointed out, hey, what you have there is a dragon finder, a pretty reliable dragon finder, that the SSC failure in daily summer conditions turns out to be a great way to find and start riding dragons. And if you can manage the no lose plus dinner for two stop, you actually get a positive expectancy in that direction as well. So he couldn't see that, mostly because there wasn't enough time, from the time he completed his research to his own thorough analysis. But he was also not able to see it immediately. And he normally would see something like that if somebody else showed him it, because I've seen him do it. He wasn't able to see it because he was on the inside of it. He was too connected to the idea to be able to see what was on the periphery. Well, that's one of the powers of the collaborative group, is that it will be there to find those other perspectives that we don't see, because of reasons, as I like to say. All right, so here we are. That's what I wanted to say about that. True storytelling works. True story roundabouts with that are built on safety, trust, truth inevitably lead to opportunities that'll surprise you. When you combine that with Fletcher style creativity. Oh, I got to tell you that story. So this morning, after the first kid comes in, I go running downstairs to get some coffee, and who do I meet but our commanding general in the basement hallway? He's trying to sneak over to get some coffee. So we're walking and talking for about 3 minutes, and I gave him a quick executive summary of what we're doing with the Fletcher creativity. That's, by the way, is the basis for our creativity courses for the tortoise, but we're also fully embracing that creativity treatment for the Army. And I told him about it very quickly. He was so enamored. He said, and I told him we have permission to get the PDF. He's sending that book to every general officer in the Army and sending it to every Army school for use in our classroom. That's how good the Fletcher creativity treatment is. So this community of practice is going to be the only people in the world who have access to that brand of creativity as applied to trading. So be on the lookout before the start of the new year for that Creativity 202 course. The Creativity 101 course, that is a good and required entry level treatment of creativity, sets the stage for Fletcher's work, is already up and available, and you can knock that out in about a week. It's on sale at on the website for $100. At the start of the new year, it's going up to 200, and it's a prerequisite for taking the Fletcher course, Creativity 202. So just to let you know. Yeah, so if you're interested, send me an email. All right, so here we are today. What I wanted to show here before the power blew out on me was we had this sell-off in here that went from about the Bollinger Band mean, when the RL10 crossed the Bollinger Band mean, and collapsed down basically to the Z2. So we've got a 2 sigma adverse move below the Bollinger Band mean. And then it reversed. Notice it reversed into the winter, across the baby dragon. That, by the way, is the signal in the system that Lisa briefed that had a SQN of 16. So here's what I'm going to tell you, that when we compute where the crossing of the RL10 and the baby dragon is, if you just add a frog box to that price level and make that your intraday entry level, you're going to be glad you did. So more to follow on that one, but that's the idea that came out of our head this weekend. That's how you use turbo and core with this idea of the turning movement and then the baby dragon alert. You drop down and then put a frog box from that crossing point, and then off you go. Well, what we got was that first strong day yesterday, Luke's first day on IWM, and then today, down to be fair, he was sleeping because he worked hard this weekend. But we talked about good probability of an additional follow-through day in IWM, and we got an even better move in IWM than this one in SPY, when you'll see that one here in a little bit. So here, it crossed the Bollinger Band mean, the RL30 reversed to slope up. The hull is very strong and up, and we breached the PSAR with the price, and the RL10 is not far behind. It's lagging by the width of the dragon. But that's actually the CATA 2 emergency exit right there, or emergency entry right there, to get in front of that move. And my advice is generally like half a position on a day chart, and then intraday you can crush that with a nice move intraday. All right, so for the rest of the market assessment, to me, everything north of the Bollinger Band mean is green, and I want to be long. If it gets above this RL10 peak, then I really like that, and I really want to be long in this darker green area, right? Oops. Because we have the peak of the the peak of the RL10. So if we get across that, then I want to be long. Now the darker green, I really want to be long. And then if it breaks above the all-time high, I really, really want to be long. I want to be long even further. And the reason for that is because it will have left the river, all-time new high, so there's no resistance overhead. And it's breaking out past Z2 if it does that. So it's into the area where it can really run amok. So that would give us the ability to have 2 or even 3 positions long and going hard. So that's my read on that. So layers of enthusiasm. Anything north of the Bollinger Band mean I want to be long. Above the leaving the river and breaching the top of the dragon and the RL10, I really want to be long. And then if it creates an all-time new high, dude, I want to be long. So that's how I'm reading that. Let me know if that was helpful. Yeah. Ken H says, yeah, not bad. That was our joke from this weekend. Luke's briefing was so good, and everybody was praising him so much. And I said, well, so he doesn't get the big head. We said, Luke, that wasn't bad. We've seen worse. That kind of faint praise in machine shops is about the best you'll ever get. It's the highest form of praise you can ever get, because they don't want you to get too all swole up, right? All right, so here we go. The S&P was up 2% today. The Russell was up 2.3, good follow through. Tech was up 3%. Emerging markets were up only 1.58. Diamonds were up 1.39, and the treasuries gave off 0.8. Hey, let me check real quick. Is Chi Wang in here tonight? No. When Chi Wang Chong, when you hear this later, when you review it, you did a chart frame for us that showed the RL30 slope of the some of those XL series. I think you want to do another one of those also for those 6 indexes so that we can get that same comparative view of how they're performing relative to each other on a single chart. You'll know which one I mean. So let's get 2 of those. Get one for the indexes and then one for the XL, B, E, F, and K. That's going to be very helpful. All right. That's another thing that came out of our weekend. We got work to do. All right, here's what was better than the S&P today. Wheat and precious metals, 2.1. Oil, 2.14. Consumer discretionary, 2.3. Energy, 2.34. Commercial real estate, 2.4. The FANGs up another 3.2%. Technology, 3.5. Let's see, Ethereum, 3.6. Clean energy, 3.8. Oil exploration, 4%. Bitcoin, blockchain, biotech, 4.5% and 5%. Arc innovation, 5.4. You know, for a minute there, you were happy to have the S&P that was up 2%. Now all of a sudden you see this. Get spoiled. Arc Genomics up 7.6. Individual companies. Coinbase 8.8. Virgin Galactic 6.7. Here's one that's really interesting for us on Devon Energy. This is the only one in the whole stack that is both green dot on monthly summer, and green dot on daily summer. That's how good Devon Energy is right now on a relative basis. And that could get overlooked on a day of great enthusiasm like today. Like Tesla, for instance, is on a monthly summer, but it's on a daily winter. Whereas, again, Devon Energy, monthly summer, daily summer. Pretty good stuff. All right. Moonshots in Squarespace, 5.5. Tesla, 4%, now back up to 1051. TX, Cliff, and US Steel, the steel makers were all very strong today. And again, last week they got smashed, and that's good for us. That's like the sound of metal on metal getting your attention to start stalking them when they have large sell-offs like they did last week. That's an alert to be ready to buy metal on sale. Apple, 3.5. Bitcoin, PayPal, Alcoa, everything good. Microsoft, 2.7. So the techs were good and better than the S&P today. So return to somewhat of a normalcy, right? Underperformers, Mexico, 2%. Finance, Brazil, lumber, marijuana, 1.6. Materials, that's how good the steels were, that materials underperformed the S&P, but the steel companies crushed it. An important distinction in there. Sectors and subsectors. Blended commodities, 1.5. The other lumber, 1.3. Large cap blended crypto, 1.3. Lithium, staples, 0.2. Now, the only things in the red today on our stack, agriculture, minus 0.1, and the VIX given up 11%. Interesting times. All right, let's take a quick look at the trades from the gang today. Oops. I have to reopen them. When I lost power, it shut everything down. Stand by. Luke texted, he needed some sleep last night. That's a sign of weakness. But the father of 6, so Glenn Osborne sent me a link to a guy that is offering bar by bar trading in his strategy. He has a single strategy, and he's offering bar by bar training. He gives you 1 hour of a technique video and then 1 hour of bar by bar training, and he charges $1,500 for that. Man, I gotta sharpen my business mind, I guess, because we teach any number of strategies, and we have 30 hours of bar by bar in our with notes. With over 1,000 decision points to study. All right, let's see what we got here. All right, so this is Les working TNA. That's the triple bull. Very good timing on that one. So here's the gap that we get today. I'm going to note that if you know what the size of your wrist box is, if you're going to trade TNA a lot, study the size of that typical risk box. And then when you have the low of the day after a gap like this, and it's going, and you put that risk box here, you might have gotten this one here as it crosses the VWAP. And that VWAP starts going, you might have gotten a stop in here for an extra 1R. And then by that time, this could have been a second entry. And then if you take the standard exit, you more than double that performance, which was really good. But this is good. What I'm glad is that you took this instead of bringing that stop all the way down, because if on that kind of positive move and everything working hard in the market and tech leading the way, then the VWAP should hold, and it did. So good read. And then I love the sniper exit. A 1, 2, 3 exit would have been here, and it's really no different than what you got. Yeah, using probably the VWAP as you went, or the PSAR as you went for a good sniper. Beautiful reentry. Good job getting paid. Nice reentry. Gets paid. He's almost learning too fast here. So that gives you about 3.35. Just using the standard PSAR stop, like Bill Scheit briefed this weekend for his swing pattern. All he uses is PSAR flips and PSAR trails. Sort of the universal indicator. Very nice work, Les. Here's the next one on Devon. And again, this is going to be my point about here's the gap, and Devon Energy is on a run. So if you know the size of your MMRB, like if you were specializing in this thing, and it moves one of those boxes off the gap up, you might have gotten that one. And then you'd probably take this somewhere in here as an exit and made probably plus one. And then this becomes the re-entry. That's a good standalone trade. And bingo for 2. Nothing wrong with that. How many days do you want to do that? All of them? I do. Just for stalking purposes, you can see this entering a sideways quiet channel. It won't be a super pinch. Like this could already be a Z3P, because if this was like a frog box, or let's say this was a frog box, I'm not sure what it is in that, but if the two Z3 lines were inside one frog box, then that would make this a Z3P. This is becoming a sideways quiet channel in SQC. It becomes interesting and tradable when the Z3 lines pinch so much that they fit inside one frog box. Then the breakout becomes the trade. But it's not a super pinch yet until the RL90 and the RL270 both join and get in that same box inside the Z3 lines. Then you have essentially an acorn, which has explosive potential in either direction. So that's the life cycle. You have SQCs continue to compress until they become a Z3 pinch, until they become a super pinch. And these both here, the Z3 pinch and the super pinch, are the tradable signals. The SQC is warning entering Crocodile River. The size of these follow-through moves are not large enough to do anything until you get the compression that's like a coiled spring that's then going to explode. Okay. So good work for 2. So that's a 5.5 hour day. Nice work. I said less, but it wasn't less. Oh, I'm sorry. The Chi Wing Chong. I'm sorry. I thought for some reason I thought that was less. Chi Wing Chong posted that. Well done, sir. Les, you got some catching up to do. Last but not least, Luke comes in, CLF on the 2 minutes. There's his gap. He knows his manageable risk box. It crosses the VWAP. So he gets it with the standard risk box off the bottom. He considered a second position. Waits because he doesn't quite have the full R in hand yet. Good decision. Cashes 1, re-enters, cashes a half, tries a shot, fractional loss. Now, when this thing rolls over and feeling how everything is rolling, gets 1, 2, and a cash. So for 2.6, and then some grind. That'll make anybody want to sleep. I don't mind this one at all, even though that's the third loss in a quick hurry. I don't mind that one because it's resting right on that VWAP, and failure to follow through is information. It didn't do that. So this breakdown could be large, especially if this is going to come all the way back and test the entry. So I like that. I like taking that shot. So nice work. Yeah, we all got our booster shots late last Friday, I think. So we all got a little residual cough yet. Not good. All right. Here's one I want to work through in detail. So here is a symbol. That closed down here yesterday. And then there's a large gap up. And this is my minimum manageable risk box for this symbol that I trade a lot. Sells off briefly, holds, breaks out, gets 1 MMRB. That's the equivalent conceptually of the whole frog box idea. Like this is less than a frog box, but it has the same concept as the frog box. And so here's my strict stop, that thick red line. If that gets violated, I'm going to be instantly short because I want to capture this gain back to yesterday's close. And then if my risk is still going to be that box, so I can get 1, 2, 3, 4, probably 5 of those boxes to the downside. But if this gap holds, there's an implied 2 more to the upside. It should be able to make that without trying too hard. So I'll be ready for that, right? Well, the trade that we get, let me first see if you guys get what I'm saying on that one. Is that all clear? The logic behind this setup? And then my idea is, as soon as I can, I want to get this thing to no lose plus dinner for 2 as soon as I can. The quicker I can get this to that location, then this becomes a science project for everything north of that line. I just wonder how much does the market want to give me that I can hold on to. Key thing for me is I'm not going to lose money on that trade. So that trade actually unfolds in the following way. Absolutely routine. The VWAP continues to rise. Here's where the PSAR finally catches up and then crosses the VWAP. So this is one of the reasons why when you have a large gap, in my view, you can't just instantaneously just say, well, I'm just going to trail with a PSAR, because that's way too much. And you're 15 bars in before you get 1, 2, 3 dots above your entry. And so the normal Wu would wait until you get 3 dots above your entry, and then the Wu exit would come up to here and then do that. But that, to me, I want to be, I think, like right in here already. And then maybe the southern skin of the dragon until the PSAR catches up, and then just take the routine PSAR exit. So under normal conditions, if this hadn't been a gap, that PSAR would have started off something like this probably, and you could have actually trailed with the PSAR all the way right into the sniper exit. And when this crosses the VWAP, you might have said, well, let me use the VWAP and then pick up the manager for the second half. And this one, you see, it did not fail further. So you might have gotten back in here, like on the PSAR flip, and then that would have everything would have scratched out at the managerial exit, right? So that's just a routine way to play this piece. And the essence is, when you specialize and you know what your MMRB is. So this is 40 cents. If you're trading TF, the mini contract, it's $10 a point. So that would represent a $400 risk. And this gives you a nice gain. How good? Well, let's see here. Well, with the TF mini at $10 a point, you captured 185 points from here to here. You risked 40 points. So that gives you 4.5 R execution risk. So now, what percentage of your total portfolio, if you wanted to risk $400, what percentage of your portfolio does $400 risk? You decide. How risky is that capital for you to be playing with? Is it foundational or is it risk capital? But just remember, contract with 40 cents at risk, mini contract is $400. You captured 185 on this routine trade. So you risked 400 and made 1850 on one contract. We're showing this trade in the ETF, but the ETF trades identically to the futures contract. So if you learn how to trade one, you can trade the other. Here's the follow-on trade. Dave's not over yet. So this is that first one where you made this move and then you got out at the manager. You might have re-entered. If you did, you probably would have you would not have let that position go negative. So that one probably scratches. This one is key because that would have been the manager exit if you had done, 2 contracts, or you were using the relaxed exit. You might have used this opportunity to go short to capture to the VWAP or to the RL270 or back to the open. If you had, this stop and reverse would have kicked in and then traded in the usual way. You'd have taken this exit here, and that would have give you 1, 2, maybe 3, which would pay for the 1 you would have lost here. That would have paid for 1, and so you'd captured an additional 2. So you'd have had 4.5 and 2. You'd have had a 6.5 day so far. Now, later in the day, this thing compresses into not just a Z3P, but a super pinch, because now you have this extraordinarily tight range. You have here's the RL270, the 90, the 30, and the 10, and everything all clustered up inside this thing. So you have this tight box, and you're ready for breakouts. So on this one, you get the Z3 pinch breakout. And your first move is to say, because it's late in the day, in the last hour, you think that's the VWAP magnet. That's guys unwinding their leveraged positions before they have to pay the extra cost of margin overnight. So you think the first target is to the VWAP, and the second leg, C1, hope for 2. C1, plan for 2, hope for 3. So you take the move from the RL10 to the VWAP, and you say that's 1 leg, and then you just double that. That's 2 legs. So now this is in play. If you got another one of those, it would look like this. And so that's you would be least surprised by a move to the VWAP or just an overcorrection pass. All of those are possible. So that's what the trade frame of the VWAP magnet looks like. Right? VWAP magnet. What you get is this. Oops. Come back here. That was strange. So that's the frame. What you get is actually this move. Just like clockwork. You get that first move, it breaks out, mucks around, gets to the VWAP just like you thought, gets that second directional move down immediately, carries on and starts reversing. This is the logical exit on that one because you're in the last 20 minutes of the day. This is the logical exit. So you get that move. So if that's 1, you're going to get 1, 2, probably 3R on that move. VWAP magnet and flat overnight. No overnight risk. Luke, if you're trading the TF, that thing continues to trade in the futures, but in terms of the ETF, that's the VWAP magnet. VWAP magnet, because it attracts price to come back to the VWAP, which is the settling up point for the day, the volume weighted average price. Okay. That's what I wanted to say about that. All right, to the dashboards. Still bullish, volatile. We love it. Back to overbought on everything except for the 30-day, and that's a point away from being overbought. The market has healed and recovered, but still is in a vulnerable spot. Don't get carried away. Remember, we're past 2 sigma. There's no reason for that to stop falling. So be mindful. McDonald's, United Health, Cisco, and Diamonds. There's tech and Apple. Google crushing it. Tons of dojis today. Warning. Potential move in either direction. Not calling a direction, just saying the big moves are coming. Auto framers offering some really nice ones. Merck has some 8.5 to 1. Travelers 4.4. How do you not go frame that one? I just wondered. I'm like an Apple. Superstar. Home Depot's pretty nice too. Superstar. Microsoft, pretty, and it's 2.4 to 1. When I say superstar, I'm looking at those price changes over the last 1 day, 10 day, 1 month, etc. All these things that are in the green mean they're more than one standard deviation better than their peers. That's how good those things are. Exceptional outperformers. Only 2 dojis in the ETFs, a handful of auto framers. The defensive plays got smoked again today. Treasury, silver, gold, and staples. Big winners, clean energy in the Qs, and XLK, the tech. Energy strong also. Auto framers in effect. I think I'd be looking for the momentum movers more so than these tend to be the laggards. I think I'd be more geared towards looking at the momentum continuation plays, to be honest. Although I'm always interested when Microsoft is on that list. I'm always about that. Latin America and Brazil were squeezed tightly and poised for a big breakout. I like that. You got some spring creeping back into the seasons. Those are your early leaders. The summertime ones are your long-term leaders. Apple, Procter, and Chevron. Intel and IBM are in the spring and dramatically rising. A spring and green I actually really like. And Intel and IBM, we've talked about them last week, starting to show some strength on the basis of their NDX performance. So you're seeing Cisco, McDonald's, and Apple. I like that. Liking Microsoft here. Even PayPal is really starting to show some. That's coming out of a deep hole right there. All that red now turned into green lately. PayPal's on the move. All right, that's everything I want to talk about. This would be a natural place for that. You can see the slope of the 30 getting better at the bottom of the stack and at the edge of the yellow and getting poised to make a nice run up. So be ready for that. All right, that's everything we got for today. Some good lessons in there. Take good care. We shall see you tomorrow.